So the last idea is to buy growth stocks. And I have tried to differentiate from what people understand growth stock as. I added a word called Lindy. Okay, later I'll explain what this Lindy is. It's not a lady, okay? It's a concept. And growth stock looks like that. Growth stock means that the share price will go up over time. And then value stock looks like that. Okay, this one looks like value stock. That's like growth stock. So growth stock over time, the share price goes up, the value also goes up. Okay, actually it's because the value go up, that's why the price go up. For value stocks, the value don't go up in the long term one. It's usually quite flat one, very stable one. And that's why their share price also range bound one. Okay, sometimes there are certain things that happen, earnings turn around, they strip assets or something. Okay, you have to take this opportunity to sell. So you want to buy when it's low, sell when it's high. Okay, if you don't sell, price can collapse. Okay, if you don't sell, price can collapse. All right, and if you hold long enough, as you can see, your wealth don't increase one. Yeah, your wealth don't increase one. So you have to sell at one point in time. Okay, buy and hold value stocks will not solve your problem. Okay, you have to sell. And sometimes maybe you thought that the catalyst is going to happen, but it didn't happen, or fundamentals has deteriorate, you have to cut loss, you have better cut loss and move it to something else. Okay, so you have to manage that position. You cannot just leave it there and hold and hold and hold and hold. At one point, you need to sell it. Okay, so that is what value is looking like. For growth stocks, you buy and hold. Because over time, their value will go up. Yes, sometimes the share price will come down, there will be crashes, there will be like correction, there will be bad news. But it doesn't matter. Because given a long enough time, the share price will continue to go up because the value keep going up. The business keep becoming valuable and more valuable after year after year after year. Okay, so this kind of stock, then you don't need to waste time trading in and out. That's why you just hold. These are the kind of like Warren Buffett stocks. Okay, Warren Buffett started buying these kind of stocks, value stocks first. Okay, then after that he switched to this. All right, okay, it doesn't matter. Okay, it's just what suits your style. Okay, there's no right or wrong. Okay, some people don't want to do long term, they want to do short term momentum trading, also can. You want to do dividend focus on, also can. Right, you just need to know what is your strategy. That is my point. Okay, a lot of people, I find that when they go to the market, they have no strategy. They just anyhow ad hoc here and there, buy this, buy that. There's no bigger plan of it. And the portfolio is just a assembly of randomly bought stocks. Okay, that's not the way to go, right? So you need a proper approach, a proper strategy. Know what you want out of their portfolio. Okay, then you know, and your preference, then you know what kind of strategy you're supposed to employ. Okay, I'll explain what is Lindy. What kind of stocks are our bank stocks? I'll put a question to you guys. What do you all think are our bank stocks? Our bank stocks, value stocks or growth stocks? My view is that they are more value. Okay, bank stocks in Singapore are more value stocks. Or bank stocks in general are more value stocks. Okay. You want to buy and hold for the dividends is also okay, right? But the key thing is that you need to do the valuation very properly. You must know when to buy the bank stocks. Okay, because the value don't go up a lot one, right? So you can argue that our bank stocks have S&P growth, right? But their growth is very slow, less than 5% average, right? I think last few years did well, but long-term average less than 5% growth per year. So instead of the graph that looks like that, right? The graph may be like that one. They grow but very slow, very slow, very slow, very slow, very slow, very slow. Okay, you still can buy at home, and generous dividend. So you don't mind holding. So not wrong. Okay, it's a bit hybrid, right? So it has some growth, but it's not very high growth. Okay, and when the growth is not very high, right? Just remember this, right? When the growth is not high, the cheaper you must buy the stock. Okay, you have to buy as cheap as possible. Okay, because the value don't grow much, you won't get a lot of capital gain. Yeah, so I would say that I label bank stocks as value stock because you have to buy at undervalued price. You cannot buy at any price. You have to buy at undervalued price. Then you get good, reasonable return. Okay, you cannot buy a bank stock like how you buy a normal growth stock. You will not make a lot of money. Okay, because their growth not high enough. Yeah, so that is the idea. And the next thing is that we want to figure out how then can we buy the growth stock that can keep growing and growing and growing and growing. And what do we mean by Lindy stocks? Okay, so a lot of people would think that growth stocks, right? Wow, it's about buying change. Okay, wow, this is the next I don't know, Google, next Amazon, right? Very exciting one. Okay. If you take a leaf out of how Warren Buffett think about long-term growth stocks, right? Is actually investing in business that don't need to change. Okay, because change is very uncertain. The future is very hard to tell because we are here. The history is very clear. There's only one path, but the future has many paths. How do we know which path is going to take? And change means there's no precedence and is anyone's guess in the future, right? The more certain ones are the businesses that don't need to change. Then confirm it won't die one, right? That kind of thinking. Okay. So this is what he say. Buffett say that in the AGM, he said that they are slim in the ability to predict where change will lead. They are much better at products where change will not mean as much. Okay, there's not a whole lot of technology going into the art of the chew. Okay, so he actually avoid uncertainty. He want to be sure, right? I buy this growth stock, high chance it will grow for a long time to come, no matter how the world turns out in the next 10, 20 years. All right, so that is that kind of growth stocks or the Lindy stocks that I'm talking about. Okay, so they are the true long-term growers. They are resistant to change. Right? So what are some of the businesses that you can think of that don't need to change one? In the next 10 years, their business is still the same. Their product or the service is still the same one. Will not change one. HSA, Coca-Cola. Yes, right? The Coca-Cola recipe is the same as 100 years ago. They try to create new Coca-Cola flavor, all flop one, cannot make it one. In fact, people don't want it to change, right? You prefer it to be the original recipe. Okay, what else? Agriculture. Maybe more end product lah. Don't think in terms of the raw commodities. Of course, they won't change lah, but raw commodities very cyclical in nature. They have no branding, nothing. Okay, trying to give me some brand, some products. Don't give me very generic ones. Yeah, I see McDonald's. Right? How do you think 10 years later we will still eat McDonald's? 20 years later, will we still eat Big Mac or McChicken burger? 20 years later, will we still wear Nike? How sure are you? 30 years later, how sure are you Costco will still be around? 10 years, 15, 20 years later, will you think Viacom is still around? Okay. So that is that thinking behind this mental model here. We want to call it called the Lindy effect. That means something that has been around for a period of time are more likely to stay relevant in the future. Okay. And so like what you all suggest, a lot of the consumer food brands, right? Coca-Cola, P&G, Heinz. How about this interesting one? Do you have this in your house? Do you have this in your house? WD-40, do you have it? Somehow you have it, right? It's like, it never goes away one. You buy new house, you also buy one, right? It never go away one. Okay, so 10 years, 20 years later, will you still have rust? Of course. You never go away one. Okay, so that's the idea, right? That something that will never be obsolete given enough time. That is what we are trying to find out here. What kind of business can really have that longevity? All right. Okay. So another way to look at it It's called the dividend aristocrats. I don't know whether you hear about this before. These are companies that are able to grow their dividends every year. Man. Do you like or not? Do you like companies keep growing their dividends? That means you lock in the price now, your dividend you get every year increases, man. Right? You like, right? Okay. So these dividend aristocrats in the US, right, are the ones that can consecutively grow their dividends for more than 20 years or 25 years. Very long. Okay. For example, the first one is this company called Dover. Yes, increased their dividend for 66 years there. Wow, even older than me. They've been raising dividend. Genuine Part 66 years. I think Buffett also have this. Buffett used to have Procter and Gamble, right? 3M 64 years raising their dividend. Coca-Cola 60 years. Johnson Johnson 60 years, 59 years. I want to ask you, how can they grow their dividend for so many decades? How is it possible? Where do they get enough suckers to buy their stuff? How? How do you get enough suckers to buy this? Okay, recurring business, pass cost to customers, volume increase, demographics, use more, expand, acquire, growing population. Okay, one key thing is that can they just stay in the US? Is it enough or not? Can they continue to grow like that if they just stay in the US? What do you all think? Cannot, right? All these are global businesses. Okay, because you need to keep finding new customer. You retain the old customer, right? But you have to find new customer, and that's how you go global. You have to go global. Okay, so US have a lot of MNCs. They are able to do it. Right? Yes, inflation as well. Partly they can raise the price. And in the first place, why can they raise the price? Because the consumers are reliant on it. Right? Can. So then the next question is ask ourselves, why does most of the MNCs come from here? Because when you want to buy growth stocks, right, the longevity of growth is very important. Okay, you must be able to grow for many, many years to come. And we know that if the company only operate in the whole national level, right, it's not enough. Even US, yes, it's a big market, 300 million people, but it's not in the billions. Okay, so it has to, one key thing that you want to look out for, right, is that if you want to buy growth stocks, right, you have to buy companies that are able to become MNCs. These are the true growth stocks. So that they have longer runway. If they are only at the national level, right, one day their growth is going to stop. You cannot have this kind of numbers, man. Can grow for 60 over years. Okay. And all right. So how? Why did US come to here? So I have two characteristics that pick out. So one, yes, it's actually a huge domestic market. But it's not just that, it must be homogeneous enough. Because huge, but they're very diverse, right? No use. Your business will have a hard time gaining ground even at a national level. Okay. Why I would say US homogeneous? Yes, one is a common language, right? English. Second is a very strong similar culture, consumer culture, because they watch the same movie, right? Hollywood movie, TV series. They have the same pop culture. They know what people are talking about, right? And they also get united by the American dream. Okay, whether is it whatever race you are, whichever national you came from, right? You become a new citizen. You're all united by that same American dream. So they are very, very similar. Aspirations are the same. You want to be rich, successful, famous, whatever. Okay, so that is good news for you. Their business, because the whole market is very similar. If you can succeed in Texas, you can succeed in many other states, because the people are the customer base are very, very similar. Right? Some small differences, but largely you don't need to change much of your business model. And once you hit the national level, you're very large. Okay, you're already quite a big company already, make quite a lot of money. Then to fund further growth, what do you have to do? You have to go overseas, right? Right? Okay. Then you want to become the MNCs of the world. Okay. But before we go on to this line of thought, right? Let's shift to Singapore. And I say that Singapore is not a good place for growth stocks. Why? You agree with me, right? A lot of people tend to think that Singapore, are you sure or not? Small market, right? Singapore homogeneous, but small market. Okay, all right, correct. Small market, 5.5 million, which means that not very long successful business, right, can saturate the Singapore market very fast. Oh yeah, ASEAN, yes, ASEAN not homogeneous, correct. So then the story is that you need to go overseas, right? You need to go overseas. Then look at ASEAN, okay? That's the natural consideration. But ASEAN, these 10 countries, have 600 million. Yes, it's huge, but they are not homogeneous, right? The languages different, purchasing power different, religion different, political system different. Okay, as much as ASEAN wants to unite together, they're just different. Okay, let me ask you, right? Do you identify yourself as Singaporean first, or do you identify as yourself as ASEAN, as an Asian? Which one do you identify as? Do you identify as your nation, or do you identify as your region? You identify as Singaporean, right? Yeah. Let me ask you about America. Do you identify, oh, I'm a Californian, or do you identify I'm an American? Which one? Okay. Of course, you argue that this is a country, ma. Of course, Singapore is a city state, ma. Of course, it's the same, ma. Right? But if you take Europe as an example as well, it's not very homogeneous because a lot of people don't understand the homogeneous part. The French will identify themselves as French. You identify themselves as a European. Okay. The Americans will identify themselves as North Americans. Right? They identify as Americans. Okay? So that is that idea of homogeneity. All right. What you identify as first actually gives you a clue whether that region is homogeneous or not. So I can tell you the ASEAN is not homogeneous one. Nobody want to identify and I'm an ASEAN, I don't know, ASEANian. Nobody say that kind of thing. I'm very proud to be a Southeast Asian. Nobody say that kind of thing. Correct or not? So I can tell you this region is very difficult for business to expand because it's very non-homogeneous. Every time you go to a market, right, it's totally new. You start from scratch, right? You cannot carry forward whatever success you have enjoyed in your domestic market. And with 5.5 million, your market is still your market don't give you a lot of money, then you're forced to expand. The difference is here, right? When the US company, they decided to, maybe they want to conquer ASEAN, okay, they go ASEAN, they say, I want to go into this new market, right? They will meet with the same problem because the people in ASEAN are very different from the people in America. Different. So they also need to figure out, wow, start from scratch, what kind of things that they will buy. But the difference is here, back home, they are funded by a lot of capital. They are already a big company when they go overseas. But a Singapore company is a small company when they decide to go overseas. So they're undercapitalized. They don't have enough money to test their business model until they find a success. That is the reason why you don't see a lot of MNCs coming from Singapore. And that is why it's not a good place of growth stock, especially in non-homogeneous regions. Singapore stocks are good for value stocks, are good for dividend stocks, not for growth stocks. Okay, so different when it comes to growth stocks, your consideration must be more stringent, right? You cannot anyhow buy on. You find the right geography, you already win the battle by a good margin. If you pick a growth stock from a wrong region, you will fight the uphill battle. Not impossible. I'm not saying that it's not possible to grow. It's just that you fight the uphill battle. The probability is much lower. Okay. Yes, you all are alluding to China, right? So we'll come to it. Okay. But let's go back to those stocks first. Right? You all know a problem. What do you all think are the problem of these stocks? You all agree, right? Coca-Cola will still be around next 10 years. WD-40 will still be around in the next 10 years. Heinz tomato ketchup will still be around in the next 10 years. But what are their problems? What are their problems? Maturity, correct. Okay. No, you don't need much innovation because you can keep selling on. Okay? That's the beauty of it. You don't need to spend on R&D too much. Then you have more margin for shareholders. The key is that they're not growing much. Yeah, I give you the 5-year annual growth rate. WD-40 is growing at 5.1% per year revenue. This is not fast. Okay? When you grow around your GDP of your country, right, it's not fast. It's considered slow. Correct? Procter & Gamble sounds good lah. It won't change, but 4.3%. Kraft Heinz even see revenue drop. Coca-Cola also start to see revenue drop. Okay, so it seems like they are saturated already. They are already MNCs already. Agree, right? They are already MNCs already. They already conquered the world already. Where else can they go? Go Mars and conquer, sell to aliens. Correct? So that is the problem with a lot of all these MNCs in US. They have a great track record, but they have saturated the market already. They have matured already. They have go to all corners of the world. It's about time already. All right, it's about time already. Okay, so how? Where can we still buy this kind of Lindy growth stocks, but their growth rate are still fast enough? Where do you think we can do that? So that is the question that we're going to answer, right? So yes, the answer is in China. First of all, let's put it to the test. Is it a huge market? Can they create the MNCs of the world? Is it huge? 1.4 billion. 4 times bigger than the US. All right. Second, are they homogeneous? Okay, not really. A lot of people will jump to the conclusion, yeah, homogeneous all Chinese, ma. Not true. Because Xinjiang different. The Tibet different. Then the shaded area here, right? Okay, the shaded area here are your tier 1 to 3 cities. These are the ones that are richer ones. The one inland are poorer ones. So wealth disparity also very large. So it's not 1.4 billion homogeneous. The only homogeneous part we are talking about is this eastern part, the coastal area. That's what people say, coastal area. That is 600 million. Okay, so that is where I think they pass both the criteria. It's huge enough. The homogeneous part is huge enough. It's 600 million. And that's already double that of the US. So they do have the muscle power to create MNCs of the world. This is an example of a Lindy stock because it doesn't change, right? It's the same production way, the same recipe to produce 30 years ago, 20 years ago, 10 years ago, now, 10 years later, 20 years later, 30 years later. Okay, it's the same. All right. And it has the national liquor kind of status. Okay, because Mao Zedong at one point said this is the liquor we drink. So now even every official banquet in China, they drink this. Right? And it's not cheap. The price keep going up. I think now one bottle is Sing 700 plus. Okay, more expensive than whiskey. All right. And it's largely drank in China. It's already one of the most drank hard liquor. So that's give you a sense of how big the domestic market is. All right. And the international market now currently contributes just 4% of its revenue. Okay. So that's why I say they have a lot of potential because they can become an MNC eventually. Of course, they export the culture as well, right? And their revenue 5-year CAGR is 22%. Just in China alone, they're still growing very fast, right? Because their consumption and affluence of the middle class has gone up. Okay, compare that to Coca-Cola, which is negative 1.6%. Malta is growing at 22% per year in the past 5 years in terms of revenue. Okay, of course, they are not the same kind of beverage, right? But you get my point. The Lindy stocks in China are growing much, much faster than the Lindy stocks in US because US already conquered the world already. But the Chinese companies has yet to really venture out of China. The potential of growth, and even China alone, they haven't even finished the growth yet, right? So they have a lot more growth potential, if you ask me. Okay, because if you want to buy growth stocks, they must grow fast enough, right? And they must grow long enough. Okay, so comparatively, if you ask me, the China ones present a better opportunity. Okay, this is the dividend growth, right? Okay, 18% per year they grow their dividend. Of course, not every year. I think maybe there was a bonus issue or there's a stock split, right? So the per share actually goes down. The dividend per share actually goes down, but you can see the dividend per share actually goes up majority of the years, right? So it's damn sure, right? You hold a stock every year, you get pay raise one. You get pay raise from your stocks. They just keep giving you more money. Okay. Yes, COVID time still good. Better, you need to disinfect, right? disinfect your throat. Drink more. And something about dividend growers. So this is considered a dividend grower. Okay, they grow their dividends over a long period of time, just like the aristocrats. Okay, so you get both capital gain and dividend gain. Best of both worlds, right? For example, right, maybe the yield you buy is very low. You bought the dividend yield for more time, maybe just 1+%, very low. Anyway, you didn't buy it for the dividend yield, right? You buy it for the growth. Okay, most of the return comes in the form of capital gain. But to give you some idea, if you buy a 1% yield and you never buy anymore, just park there one side, right? 20 years later, if they compound 18% per year in terms of their dividend per share, right? Your dividend yield shoot up to 27%. It's a very good retirement tool, correct or not? Because let's say 20 years later you retire, okay, you lock in today's price, 20 years later, your dividend yield goes up to 27% because your dividend keep going up every year, right? You get more and more money every year. So by the time you retire, right, it's very substantial in terms of their dividends. Yeah, I don't know how many of you see that. Right. So actually, these kind of stocks are very good for retirement planning. Okay, if you ask me, right? You grow a capital, and you don't need to switch anything. You don't need to pay a lot of brokerage fee in and out. Don't need to waste time. Right? And the share price is like that. Okay, 16 years, 164x. That's why I say most of the returns come in the form of dividend, capital gain, not dividends. Okay, but even the dividend yield is very attractive after they compound for a long time. Right, 37% per annum. Okay, well, very simple stock. No need technology one. It's the same old recipe all the way. Lindy stock. 20 years later, still there. 30 years later, still there. Right? Very high chance of that survivability. Another idea, media. They're actually known for aircon, right? Air conditioning. Okay, that's their number one thing. And they offer a lot of other products, home appliances as well. They also do commercial aircon. Our Singapore's Jewel, they use media aircon. Okay, so they start to go overseas already, 40% sales overseas, right? So you start to see their presence, and they have been quite aggressive in Singapore, doing all these things. Okay, and why I say this is a Lindy stock, because I focus on aircon. Do you think 10 years later aircon will be obsolete? Maybe let's say stretch it further, 20 years later, do you think aircon will be obsolete? But in general, I think temperature control, okay, if we use the concept of temperature control, after the aircon was invented, right, it never go back, right? Carrier invented it, right? It never went back. Okay, yeah. So it gets warmer, you need more. Right? Nowadays, I think Singaporeans without aircon cannot survive, cannot think already. we need air conditioning because you die. So this is another example of a Lindy stock. Okay. And you start to see the ambition, right? They want to eye 10% of the global market share. So you can see the MNC expansion for Chinese company already start to begin, still early stages, right? Even their domestic market is still growing. And that's double from their 2021 figures. By 2025, 4 years, they want to have 10% stake. Now it's 5% market share in the world. They want to double it by 2025. And that's like 19% growth per year, which is very close to their revenue growth rate. Okay, we start to see this in I don't know whether you notice, this was taken in NTUC or supermarket. You start to see their products as well, right? So they listed about 9 years ago, 5x in 9 years, even after the price comes down. Okay, at one point, of course, a lot higher, almost 10x, almost 10x here, but now 5x. So the price have dropped about 50% already. Okay, but still very good return in a span of 9 years. So what I mean is that these are the growth stocks. It's not the very common ones you always hear, like Alibaba, Tencent, a lot of tech-driven ones. Those are investing in change, right? So the second order detail is to think about what doesn't really change, that has the longevity of growth that actually matters at the end of the day. So some of you might be wondering, how come the China company are growing faster? Okay, so these are some of the possible reasons, right? First is that China economy is growing faster in general. 5 to 6% average, US is about 2 to 3%. So it's already double that of the US. Okay. And China's domestic market, right, is double that of the US. Right? It's 300 million. We don't count 1.4 billion, we only count 600 million. It's already double. China middle class is getting affluent. US, the good thing is that they are already affluent, so they can afford a lot of things. That's why they are still ahead. GDP per capita, China no match. Overall GDP, yes, China higher, but that's also because they have a lot more people. Okay, so it's very likely that China's GDP will supersede US one. It's just a matter of time, right? But GDP per capita will take time because there are too many people. And when the middle class get more affluent, that means they will consume more, right? They will buy more stuff. Okay, so that's how the company make more revenue. Then China has been export oriented because they are factory of the world. They make things and then sell to the rest of the world. Now they realize that it cannot depend on the rest of the world because the West is very hostile. They may ban this, ban that. So now they start to focus more on the internal domestic consumption. And they term the term called dual circulation. They still want to do export, but they also want domestic consumption, to grow domestic consumption. So that again is good for the company's revenue. Okay. GDP growing faster means that the revenue also growing faster, otherwise how to contribute. All right. And bigger base means that revenue also go up. So you can see there's a lot of big picture thing that point towards that. A lot of all these Chinese companies will grow faster, okay, than the US counterparts. And lastly, we also say that US company already mature already, right? They are all corners of the world already. But China, not yet. You don't really see a lot of China presence outside of China. It's just increasing. Okay, so relatively, if you ask me, the growth potential is higher for Chinese companies, right? But of course, people have a lot of concerns. Okay, I think China investing is not for everybody, right? I don't think it's for everybody. You have to really see the angle, right? And I think the biggest problem with China investing, right, is that the person value is very different from the Chinese values. Yeah, usually that is the issue. Okay. Yes, regulation is always a very big issue, right? But people don't realize that China, if you want to invest in China, is very different from the US. Okay, you cannot take the template from US and plug into China. China is a different animal altogether. Regulation is not a bug, it's a feature of the government. It's not US don't want to regulate. US also want to regulate. You see, they want to break down the big tech companies, just that they don't have the power to do so. China can regulate because they have the power to do so. And that's what people don't like, right? Because they feel that, wow, you're just abusing your power, blah, 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 blah. Okay. But you have to see the other way. It is a feature and it's not a bug. Okay. And regulation has been around. This was done by Morgan Stanley Research. Regulation has been around in 20 years in China for a long time, right? And it started with mining. To orientate you a bit, the green part is the non-regulated period. The blue part is the regulated period. Okay, so you can see in this chart itself. So they always let the company do what they want. Then after that, they misbehave, then they come in. Okay, it's like a father disciplining the kid, right? They always have this very paternalistic kind of way of running the country. Okay, actually no different from Singapore. Right? It's very similar. It's the father head figure. I know what's right for you. You misbehave, I'm going to cane you. Right? That is the culture. That is the value system because it's very confusion in nature. Okay, it's different from US. All right. So if you don't understand or appreciate the value difference, you will not be able to invest in China. That's the fact. And it's okay, right? It's not that you must invest in China. But I'm just telling you why I think China presents a better growth opportunity when it comes to growth stocks. Okay. I don't know whether you all remember the melamine period, the milk powder. They found melamine substances in China. Anyone recall? Yes, no, yes, no. Anyone recall? Yes, right? Correct, right? Big hoo-ha, right? Wow, people crying, my baby is dying. Wow, big issue, national issue, international issue. It's not just a national issue. Okay, what happened? Do you hear of this problem anymore? Don't have. Why? Because the government regulated it. So when it comes to this, how can you not regulate? Right? The businessmen get out of hand, do certain things, then regulation is a must. Cannot don't regulate. All right. So after that, clean up. Did the companies die? No. You look at Mengniu share price. You look at Ely share price. Multiple X from where they were. Right? That is the nature of their country. That is how they operate. It's just that you are very new to it. Then you think that it's wrong. Okay? There's nothing wrong. They have been living like this for 20 years. There's nothing wrong. Or even 50 years. There's nothing wrong. To them, it's the same. Right? And also because of the media report, they tend to sensationalize things, right? Then there was a period where they want to clamp down on corruption, right? Xi Jinping was very ruthless, all this anti-corruption drive. If you remember, China used to be very corrupted one, very, very corrupted one. Now you hear less already. Why? Because clamp down, clean up. Okay. Peer-to-peer lending, a lot of people lost money to those unscrupulous businesses, sell high-risk product, then they lost a lot of money. Government regulate. How can they not regulate? Okay, so you realize they don't regulate for nothing one. There is something that has gone wrong. Okay, now then it's a property market, right? Because wow, see, you all get our hand so aggressive, go and borrow so much money, then go and build, cannot deliver units. How can don't regulate? Okay. So sometimes it's because the people get out of hand, right? Again, that father-children relationship. You get out of hand, and then you do what you want. When you get out of hand, I will discipline you. I will take the cane. I won't wait one, right? I will cane you hard. It's also that very Chinese traditional thinking, right, of raising kids. Like what 三字经，子不教父之过, right? It's your father's fault if you don't discipline your kid. So the government take that kind of value system is just cascaded at the national level, right? You get out of hand, I'm going to come and kill you. You better don't anyhow do things. Okay. Yeah, you can get rich. It's okay, but you don't go and do things that harm the society or harm other people. I will come after you. I'll kill you big time. Okay. So these are many examples, right, in the past. And again, you will see that Maltai was also affected by the corruption clampdown. But you look at Maltai, still strong. First stock to cross 2,000 yuan per share. Okay, so essentially, China regulation is not to kill the corporation. It's just to take the stick. So they don't use carrot one, they use stick to discipline. Okay, those who grew up in that kind of environment, you know lah, right? Last time, misbehave, always kena caning one. Okay. Last time school have caning, now no caning already. Okay, so Singapore also evolved lah, right? We used to have the stick treatment. Now less already, sayang, right? So that is a difference that have changed. But China is still like that. It's still a very caning kind of basis. Their thinking is that. Okay. I have more examples over here, but more detailed examples like how some of these companies like Oriental Watch actually grow a lot even after the regulation or clamp down on corruption. Pharmaceutical clamp down, China medical system also recovered. Right. So countless example, no company really died. Right. In fact, they become stronger because the bad, okay, I won't say no company died. The good players survive and prospered. The bad players get eradicated from the industry, which is a good thing. Okay, then the market share get captured by these good players. So they are trying to clean up industries, clean up sectors. China is very big. A lot of people can be very evil one. And you don't use those kind of high-handed method, right? People not scared one. Then they'll climb over your top. Okay. So it's very different from US. You cannot think in terms of US value system and put on China. So they have their own difficulties, they have their own challenges and context. So if you see in the right light, then I think things start to make sense for you. Okay, all right. So all in all, I must say that growth stocks, I prefer those kind of Lindy, those kind of dividend grower, right? Okay, the dividend grower. Okay, those are the ones that I prefer, not those sexy businesses. Yes, they sounds nice, but you never know. Like even Meta, right? Facebook, all this, right? Wow, at one point they would look so invincible, right? Wow, you have to advertise on Meta, you have to advertise on Facebook, you have to advertise on Instagram, otherwise you will not. Then suddenly TikTok come and just destroy them. Okay, so the problem with innovation, right? If you are dealing with innovation, you're dealing with change. I'm not saying that you cannot buy tech stocks. I'm just saying that they are much more unpredictable. Their future growth is not so clear whether they can continue to maintain that seat. Okay, because they keep changing. The leaders can keep changing a lot faster. Coca-Cola, on the river side, it has been around, right, for a lot more. So it's about buying more predictable stuff because the future is already very unpredictable. Don't make it even more uncertain. Okay, so that is my preference. All right. So different people have different preference. Okay. And I have no time to go through this as well, right? I think there's an important point, but I think in the interest of time, let's keep it for another day, okay? And just to recap, geography selection is very important for growth stocks, right? The country must be able to produce MNCs, okay? Then your growth longevity is higher. Okay? It's the longevity of growth that's very important. That's where compounding effect takes place. Without the time, then your growth cannot. Okay, can higher media agree. I have higher media. Okay, their numbers are better, more international also. Agree products lesser, fewer, and more domestic. All right. So I have both lah. Okay. How will you characterize Baba, Tencent? Growth. Their growth. Just that their future growth is less predictable. Okay, less predictable. Now their homegrown threat is also for Tencent is also Douyin. Summary, right? I thought about 3 strategies. My approach. Remember, I said it's better to focus on strategy rather than tactical positioning. Short-term momentum, weeks to months, buy high, sell higher. Remember, buy the one with strength, not the one that is laggard. Valuation is not important. What is high can go higher, right? What is cheap can become cheaper. I show you many examples. Then medium term, you also can have medium term is a few years, right? So you have value opportunity. You want to buy low, sell high, right? Valuation is very important because if you don't know what is cheap, then how do you know when to buy? If you don't know what is expensive, how do you know when to sell? So valuation is very important for you to decide when to buy low and sell high. Okay. And another aspect that's overlooked is that sometimes you find undervalued stock, it doesn't mean that share price will go up. So you need to look for a catalyst for the value to unlock. So if you don't see a visible catalyst in the near future, right? Then maybe can skip the undervalued stock. It may not go up. All right. Look for something, maybe a sector change, like what we talk about, hotel recovery, tourism recovery for hotel sector. Talk about what are some of the things that can happen. Are they maybe there's more M&A in Singapore selling malls, like NTUC selling malls. Maybe 100 EM can also be sold, right? So some of these things. Okay, so if you can figure out that is an event that's going to happen and it's undervalued, then you got a good chance. Okay, so that is those kind of opportunity. Then we talk about growth stocks, right? I say that these are long-term, many years, 5 years and beyond, 10 years, 20 years if possible. Once you identify them, you buy them and just sit there. Don't need to waste time trading in and out. Okay, few stocks are like that, right? Can become very stringent, and you want to think Lindy such that they can stay relevant for a long time, and yet their growth rates are fast enough, right? Unlikely you can buy at cheap prices. Buying at fair prices is good enough. Okay, like multi you buy undervalued, right? I think very hard. Okay, very difficult. It's always overvalued. Because it's not only you can spot it, other people can also spot it. All right. So these are the strategies that I talk about. Each person may have a different strategy. Some like to employ a few, right? Because sometimes you buy and hold also very boring. Then after that, do what? Then somebody, okay, let's look for some opportunity where you can like spot some special situation, or maybe we just do some short-term trading. Yeah, you can also balance it up like that, right? It's possible. Okay. What about REITs? Are they value or growth stock? Value. Right? Dividend yield, high dividend yield is a value concept. You're buying undervalued stocks. Okay. For D%, does it make sense to refer to post-COVID peak or pre-COVID peak? What do you mean? I don't understand your question. You may ask again. Right? So the overall picture, right? I covered quite a lot of things today. Okay. So I don't want to repeat them. Okay. Most importantly, get a few things. Your sanity is important. Right. So if you're worried, please go and do something, reduce your position, change your perspective. Okay, that will help. And I share with you that don't do tactical stuff. Okay, use a strategy. Right, use a strategy so you'll be more guided in the market to know when to buy and sell. Right, I know a lot of people at the end of the day feel very lost. Sometimes you thought you can make a quick trade, then you got stuck. Then you don't know what to do with it. Then after that, you ad hoc buy a few more. Then you got a portfolio all stuck. So I think that is a key critical problem for people. It's a lack of a strategy to handle your buy and sell decisions. right? So having strategies help. Okay. And by knowing what kind of strategy I go through today, you have an affinity to some. Maybe some of you really, I'm a short-term trader, I know already. And some of you, no, I'm those that buy and sit down one and don't touch one. And say, no, I'm those that find those kind of very unique opportunity, go in, out, like a sniper one, right? So different strategy suits different people and preferences.